Welcome to the Black Diamond Ball virtual workshop. My name is Gareth DaSilva, Regional Manager, Business Banking at RBC for East Toronto. I'm really thrilled to present to you today a great workshop speaking about access to capital for business owners in terms of how to get their business started. I'm joined by my colleague, Denton Dewar. Denton, I'm going to hand it over to you to maybe do a quick introduction.
Good evening, everyone. I am excited for this opportunity to share with you one key program that will be able to help you to access capital as a new business owner. I am a business account manager with Royal Bank, and I look forward to providing some key insights as to how you can access this program.
So let's get started. And we can get started with the presentation and the slides that are coming up here. Why is capital so important to starting your business? I guess that's a question that many business owners face and experience as they go through the journey of starting their business. So startup capital helps business owners when it comes to meeting their initial financing needs for the business, such as equipment, improvements to the location that they're looking at. These are all very, very important elements of why startup capital is a key component when considering to start a business. Today, we're going to talk about the Canada Small Business Financing Program, or we'll refer to it in our presentation as the csvfp. If we can go to the next. In terms of how we're going to structure our presentation, we're going to talk about the csvfp program and criteria, and we're also going to talk a little bit about the csvfp resources available to you. We can go to the next. So what is the csvfp program? It's a program that aims to increase the availability of financing for establishments, expansion, modernization, and improvement of small businesses. The csvfp was established in 1999 to replace the Small Business Loans Program, which began in 1961. So some of the activity and benefits of the csvfp: over 27,000 loans have been advanced for a total of $5.15 billion between 2015 and 2019. Without the program, it's expected 80% of these loans would not be granted. 60% of the loans were for startup businesses. Businesses included in the Profit 500 ranking from 2015 to 2017, 6% of those businesses were former csvfp borrowers. You can go to the next. Here's a great visual and just an understanding of some of the numbers associated with the financing that we just talked about. If we can zoom in a little bit and make it a little bit more visible here. So just looking at some of the progress and growth of the csvfp program from 2014 to 2019. You can see in 2019, there were over 6,000 csvfp loans approved, which equated to around $1.3 billion of financing. Go back to 2014 on the other extreme. At that time, a volume of around 5,300 csvfp loans were advanced for about $798 million. So you can see as the economy has grown, a lot of entrepreneurs have leveraged the csvfp program for that initial working capital requirement. You can go to the next, please. Okay, so this next visual, if we can zoom in a little bit on Ontario and Quebec, that'd be great. So in black, what you're seeing is a percentage of small to medium enterprises in Canada and the makeup based on the various provinces in Canada. What's a small to medium enterprise? A small to medium enterprise is a business that has anywhere from 1 to 500 employees. So based on this information, about 36.5% of SMEs are allocated in Ontario, and about 20.4% are allocated in Quebec. The blue represents the percentage of CSBFP borrowers in Canada, and we see the concentration of 36.1% in Ontario and about 25.3% in Quebec. So just want to draw the comparison between the two and the correlation of small to medium enterprises leveraging the CSBFP program. If we can go to the next slide. I'm going to talk a little bit about eligible businesses. So startup businesses or existing businesses operating for profit with gross annual revenues of 10 million or less. The borrowers can either be a sole proprietorship, a partnership, a corporation, or a cooperative. So that just speaks a little bit about the corporate structure of the business and eligibility based on corporate structure. We want to note what companies are or what types of businesses are ineligible. So farming, holding companies, religious or charitable organizations, and non-for-profit organizations are ineligible for this program. Just a quick note there, service industries that are incidental to agriculture are eligible. So that would be not necessarily the agricultural business itself, like a farm, but service industries that are related to agriculture are deemed eligible. You can go to the next, please. Talk about some of the expenditures that are eligible and ineligible for financing through this program. So eligible expenditures include trade and equipment, computer software and certain website development costs, transportation and installation of transportation equipment, non-refundable taxes. Some ineligible expenses include working capital, purchase of shares in a corporation, franchise fees, vendor take-back financing, pre-existing loans that are looking to be refinanced, borrower's labor, and of course, refundable taxes like GST, PST, and HST. We can go to the next. Some of the eligible assets and how the financing would work. So the CSBFP is limited to the following eligible assets: equipment, leasehold improvements. And what leasehold improvements are things like improvements to the actual premises, property where the business will be operating from, real property, so land and commercial buildings. And just to note, we're going to get a little bit more into this in detail, but there's a 2% registration fee, which is involved in the CSBFP program that can also be financed. So total of all CSB programs must not exceed $1 million. So that's the maximum threshold when it comes to the CSBFP program. And that particularly is related to owner-occupied or real estate that the business occupies. And then, in terms of that $1 million, when it comes to equipment and leasehold improvements, there's a limit of 350. So there's a sublimit within that. You cannot exceed $350,000 when it comes to equipment or leasehold improvement financing. Okay. Related borrowers may each access the maximum loan amount as long as they pass the independent small business test. So, what this means here is that, an owner can have maybe multiple corporations with separate operating companies, and each company, as long as they're independent of each other, could be eligible for up to the $1 million mark for the CSBFP program, or 350 for the leaseholds and or equipment. The percentage of financing is negotiated between the borrower and lender, and it can be up to 90%. So it really depends on the industry. It depends on what we're financing, but it can be up to 90% of the value of the assets that are looking to be financed. You can go to the next, please. Okay, so just want to talk a little bit about the terms of the loans and fees. Okay, up to 10 years for leasehold improvements and equipment financing. So we're talking about the terms in amortization, the life of the loan. It can be up to 10 years for, like I said, the leasehold improvements and equipment financing. For real estate property financing, that can be up to 15 years, so a little bit longer when it comes to the amortization of those particular that particular type of asset. The amortizations cannot exceed 10 years for leasehold improvements and equipment, and then 15 years as it relates to real estate financing. Speaking a little bit about the interest rate and what's involved. Maximum interest rate is a variable rate, and it would be the lenders, or let's say RBC or whatever bank or institution, plus 3%. Okay, or their fixed rate options, lender single family residential mortgage rate plus 3%. So they're different options depending on the institution. Registration fees are to be paid by the borrower, and we talked a little bit about this earlier. That would be 2% of the total loan amount. That 2% can be financed. Okay, I'm going to move on to the next, please. At this point in time in the presentation, I'm going to hand it over to my colleague Denton, and he's going to speak a little bit about the criteria and how the businesses are assessed. So Denton, I'll hand it over to you.
Thank you, Gareth. So how do we look at evaluating your meeting requirement to qualify for the csvfp program? Now, there's some general principles. We will assess you as a potential borrower in similar ways how we would look at the standard term loan, right? So the lenders will apply the same care and procedure in making and administering a CSBF loan as they would be for that conventional loan application. The procedure must include, but is not limited to, doing a credit check on the borrower or guarantor or both, and looking at what is your ability to service the debt, right? So we'll look at the repayment of the borrower there. Next. Other important criteria that we will look at including expenditures or commitments that have been made within the past 180 days prior to the date on which the loan is approved. And one key point here is that it's very important as the business owner to have your invoices in place for those past 6 months worth of expenses that you would have incurred in setting up the business. Now, proof of your purchase and payment, of course, we will want that. So that's where the invoices come in, right? We also look at the eligible amount of the loan, and this is the lesser of the eligible cost of an asset's purchase and the eligible proof of payment that you will provide. Next. Now, specific to real property, we have a few rules that or eligibility criteria we'll look at, right? First one is called the 50% rule, where real property can be financed provided that at least 50% of the property is used to operate the business. Now, there's also the 3-year rule, and the intention of the borrower cannot be to sell, lease, or sublease the operational area for the next 3 years. Next. What are some conditions that we look at for the required invoices? What do we look for really when we consider these invoices? We want to know, is it that the invoices are addressed in the legal name of the borrower? 1. 2, It must contain the vendor's name, business address, and telephone number. There must be evidence that payment is made out to the vendor. Example, canceled check or any attestation from the vendor. Also, we want to look at the relationship between the borrower and the vendor being arm's length. So same name, same address, that may cause some issues there. We also want to ensure that there is compliance with the 180-day rule. So you therefore will see the importance of the invoice being dated, because we will match back that invoice date to the approval date for the loan that is applied for. Now, the details of the assets that are purchased must be provided on the invoice. So we look for specifics such as the serial number, the product number, etc. Unique identifiers, right? Next slide. Now, an appraisal is sometimes an important part of the assessment process that you go through in accessing this government secured loan. Now, a lender must obtain an appraisal for non-arm's length transactions, purchases of all or substantially all of the assets of a going concern, and purchases from the lender or its representative of assets that were previously financed. The amount of the loan must be the lesser of the cost of purchasing and the appraised value of the assets. The appraisal must have been made not more than 180 days prior to the loan approval. It must be made by an appraisal member of a professional association. The appraisal from a qualified individual who is at an arm's length may be used for equipment and leasehold improvements. Good. So these are some of our key conditions when we look at the appraisal. Next slide. So for this slide, we want to talk about the conditions relating to security, substitution, and release. The primary security is mandatory, and it must be of first rank and valid, and it must be enforceable. If prior security exists, it must be of the highest rank that is actually available. Additional security can be taken on any other assets of the business, right? So there may be a general security assignment that is taken. Third, a CSBF loan can also be secured by a corporate guarantee and a personal guarantee. The lender may conduct an on-site visit to reduce uncertainty towards valid and enforceable security. Next. Where can you find some additional information relating to this CSBF program? The idea here is you can use this link to access additional resources that will give you more background on the program and how you can further access the resources that it provides. Next slide. Also here, want to talk to you about in starting your business, you have business grants financing or business taxes, hiring decisions, permits and licenses relating to intellectual property or insolvency. These are all resources you can access at www.canada.ca/business. So as an entrepreneur or as an owner of an SME, we know for sure that these are some of the decisions that you will need some support with, And these are some of the resources that you can avail yourself of to help make your life a bit easier. There's also the Canada Business app that you can utilize, and Innovation Canada, which we have provided the link for these 3 resources here. So just to summarize what we have gone through today for this presentation, the CSBFP is an exciting opportunity for business owners. It gives you the option to utilize the benefit provided by the government granting a significant guarantee of a portion of your lending that is required to start your business. And it puts you in a position where once you meet the eligibility criteria, you can get started with your business rather than having to secure an asset or enough cash resources to fund your business entirely on your own. Good. So we encourage clients to take this information and to let us help you get your business started and make your business a success. We'll now open the floor for some questions and comments. Thank you.
So we were waiting if there's any incoming questions. We'll wait for those. I think we do have one asked here by Sean. Are loans difficult to get? Maybe what I can do is comment on that a little bit. So, depending on the lender, each lender has a different process when it comes to assessing the qualification standards with the CSBFP program. So, let's say RBC versus another institution. Some of the things involved when it comes to, obtaining a loan, like let's say it's a startup business, you definitely would need to sort of provide detailed business plans, whether it's something that you create yourself, understanding, let's say, industry insights are typically things that would be included in those business plans, depending on the industry or type of business you're starting. I'll use a restaurant, for example, understanding a little bit more about that particular market. What are the industry trends for a restaurant or that type of restaurant in that market included in a business plan. So those are the types of things that need to be presented to the lender to assess and understand. And I think some of the other qualification criteria, the CSBFP program does provide up to 90% financing, but in the event where, let's say, there's a 25% that needs to come from the business owner, or even 10% that comes from the business owner, showing that you have those available assets for down payment and, things of that nature become very, very important to the lender. So I think it's really important to consult with your advisor, especially when it comes to considering like a startup business or considering to apply for a loan like this.
And just to add to what you mentioned here, Gareth, we do have a wealth of resources available on our RBC business banking section of the website, where we give you guidelines on how to actually help you prepare that business plan. We also go into detail and list out what resources we have available for businesses, whether it's from assistance with your invoicing procedures, etc. Right? So also look to leverage our website there as well to help guide you in getting prepared for your submission there. We have another question here asking, is there a 1-year financial statement document required? What is required here when it comes to the business plan is that we need to see an opening balance sheet, which will detail for us the actual assets, liabilities, and equities that you're actually starting out with, right? We also need to see your projected income statement, right? Preferably for the first 3 years of operations that you're looking at. So that would be the financial statement requirement that we're looking at for startup businesses. Now, it's a different story if the business has been in operation for a year and you're looking to access some funding there.
Yeah, and just going to comment a little bit more in terms of some of the financial statements also. There are personal financial statements that we do assess too. So your most recent personal tax assessment, your notice of assessment, things like that that are usually required. But once again, I think that, the lender will send some parameters in terms of what's required. So just to give you an idea. I think we have another question here. Okay, so another question coming in. What if I only have okay credit, let's say just below good or about good? I want to know where I can go to find out how to prepare to ask for a loan. And that's a really great question. And I think that, here at like RBC, for example, we definitely pride ourselves in trying to help our business owners prepare before they get to the stage of that CSBFP application. So I would say, engaging, not only some of the resources available through your financial institution, but also, asking for that specialized relationship manager, like, a Denton, a business account manager, that can give you a little bit more insight of how to prepare yourself. In addition to the bankers as advisors, there's a lot of other, resources available in the community. There are, different, outlets where you can go that kind of specialize in terms of trying to get entrepreneurs ready to start their business up from a working capital perspective, how to start things like a business plan. There's multiple online resources in terms of the question about the preparation. Does your business, idea, is it something that can come to fruition? Is it feasible? And demonstrating that and making sure that you can articulate that, let's say to your advisor, or let's say to your banker at the end of the day where you're applying for a loan is really, really key. So, that's what I would encourage, anyone to do, is really to leverage those types of resources in the community and the market.
All right, we see we have more questions coming in. Keep them coming, guys. Really happy that you're asking some questions so we can get more into it, right? So next question we have, where can I get info to help me learn the secrets of growing my credit? I know there are secrets. And the person laughed, right? So yes, there are secrets to growing your credit. But as Gareth mentioned just now in his response to the previous question, there are various tools available online that will give you some guidance, right, as to how you can improve your credit, as well as by speaking with your average accountant that will probably say you're doing your taxes, or even leveraging advice from your financial advisor at the bank. It will give you an idea as to what are some of those key tips, right, as to how you can improve your credit. This session would not, for example, allow us to probably go into detail on what some of those tips are, but definitely speaking with your direct advisor at your bank will give you the opportunity to access some of those advice and tips as to how you can significantly increase your credit. All right, we don't see any more questions as yet, but feel free, shoot away.
So another question coming in, is there a list of financing options available someplace? So yeah, I mean, there's absolutely, a lot of resources available in terms of options. I will say that the RBC business banking website is a great sort of resource to understand the various types of financing options available to businesses. And there's multiple resources online. The program we talked about, the CSBF people into business and getting the economy going. And a lot of the businesses, small to medium size, has started with this financing option. For more established businesses, I would say there's multiple options available, whether they're more traditional financing options through a bank, like, let's say, lines of credit, things like credit cards and other types of credit facilities like commercial mortgages for commercial real estate. So there tends to be quite a few different options available. And I would direct you, of course, to your institution's business banking webpage as an example to take a look at the various options.
All right, we have another question here. If I have a business partner that has bad credit, but mine is good, is it better to apply without them? Now, what we want you to represent in any application that we're processing for you is what the true situation is, right? We'll start there in terms of what the true situation is. If that's a business partner, we definitely bring both persons forward as a business partner. We're here as advisors to really go in detail with you to look at a full picture, right? Because different times you notice someone may end up having bad credit for various reasons, right? Some of these risks can be mitigated, while some will definitely be more challenging. So I say to you, in that type of situation where you have one person having a bad credit and one having good or okay credit, show us the full situation. And of course, as your account manager, we will advise you on the best way forward. We'll look at the full picture, and there may be cases where, in looking at the full picture, we can proceed with the application.
All right, I think I got another one coming in, another question here. Does registering your business play a role in getting financing easier? So, I'll speak a little bit about that. We did touch on it a little bit in the presentation of the various business entities that could apply for this type of loan, like the csvfp loan. We talked about sole proprietorships, corporations as examples. In all circumstances, if you have your business established or set up as one of those types of entities, there typically is a business registration involved. So for this type of program, like the csvfp, in all circumstances, we do look for a registration, whether it's a sole proprietorship or a corporation, which of course we establish, and that would end up being the borrower in the circumstance. So I think it's something that most institutions do ask for. So I just wanted to make sure. I wouldn't necessarily say if it makes you obtaining the loan easier. I think it's a step that must be taken for us to sort of proceed with a business loan application.
Good stuff. We have a question here, Gareth, from Wayne Sewell, asking, where does a non-profit organization business fit into all of this, right? So where this is concerned, the Gareth just mentioned who are the eligible organizations who can apply for the csvfp program, right? However, this is just one alternative financing that we have available at RBC, right? For the nonprofit, there may be other discussions we can have, right, in terms of what we can possibly do to help the nonprofit organization itself or the actual owners behind the nonprofit to actually get you that funding that you need, right? But as it relates to the csvfp program, it would not fit into that program.
Yeah, just to jump off what Denton was saying, so the non-for-profit organizations, because the csvfp it's deemed ineligible, in terms of other financing, like more traditional credit facilities, those would potentially be available to non-for-profits depending on the scenario. So just wanted to let you know that. But the csvfp, for nonprofits, it's not a program that recognizes the non-for-profit organizations. Just move on to the next question from Leslie Jones. A minute ago, am I correct in saying the program does not recognize operating capital as eligible reason for financing? If so, why is that the case? It's a really good question, and I like that, and I want to explain a little bit in terms of what the csvfp does. So you're right. The proceeds of the loans in this program is not meant for operating capital in the sense of that's a separate type of credit facility that you would potentially want to leverage. So this program is meant for assets to be financed to start your business. So starting capital, equipment, leasehold improvements, like I said, renovations to the premises, Those are typically a lot of the things that we do see it used for. And of course, real estate, of course, if the business occupies that real estate and wants to buy it. For operating capital, depending on the nature of the business, the idea here is that the owner does have some form of injection of their own equity that goes into the business to help with that operating capital need at the onset. And of course, once that business starts up and starts making sales, that's where that operating capital comes from. And over time, that's where your bank can work with you or your lender can work with you to look at establishing something like an operating line of credit. So it's something a little bit different in terms of operating capital versus what the CSBFP is used for. So I just wanted to clarify that, and hopefully that answers your question.
All right, I think we're heating up in the question segment here, right? We have a few questions. Thank you guys so far for the questions you've been posing. We're grateful for the opportunity. The next question we have here: what is the ideal candidate for financing? Right? It goes on to say most people don't have a clue if they have a good business model for pitch for a loan or not. Is there a preferred business the bank likes to support? And there is also a related question below. But just to address this, the ideal candidate would be a candidate that has personal equity, that they can demonstrate that, one, they can fund their part of the equity injection in the business. It has a solid business idea. And by solid business idea, we're saying here, one, it's an industry that has good prospects, and your business plan is sound. You also would need to have some amount of industry knowledge and or experience in the particular business area that you're looking to enter. Also, there must be a clear indication as to how you will be generating revenues, right? Because you will need to be in a position to service the debt, right? So with those being some of the key parameters, showing your equity that you're injecting in the business, having a good network, showing that how you intend to generate revenues and having a solid business plan, those all help to make you a good candidate to access financing from the bank. Now, in terms of a preferred customer or a preferred bank, the CSBFP program, it has these eligible institutions, and there is really a wide plethora of businesses that can actually apply for this program and access the capital. So the idea is, if you have a business plan, you have a business that you want to start, engage us so we can discuss further, and we will be able to give you that one-on-one advice as your trusted strategic advisors.
Thanks, Denton. And just to re-emphasize, I think one of the points you mentioned in terms of the ideal sort of candidate to, somebody who has operating experience in that business, I think is really, really key. Whether it's some sort of a history or experience, like if you wanted to open like a restaurant and you had experience in that industry prior to opening the business, it does go a long way, and something the bank always looks at very closely. I'll move on to the next question here from Natalie a few seconds ago. If you want to open a small business account through the financing program, do I need to also have a personal account with the same institution? So the answer is no, you don't. You can, by all means, have a business account, let's say with an RBC, and a personal account at another institution. That's not an issue at all. You don't necessarily have to have both together. Okay.
Gareth, you can
and then I
say the
can
next
move on
one
to
as
the
well.
next one there. Yeah, sure. What businesses do the banks not like to finance? So, I mean, that's a broad question. I think that, we look at every sort of case by case in terms of what's out there. And then obviously, we're also driven in terms of, when it comes to our assessment of things like, risk, the applicant, we look at industry insights in terms of trends of what's going on. There are going to be certain businesses that may have further challenges versus others, really depending on the the economy in terms of what's going on in terms of current um, uh, situations. So RBC, for example, in terms of our commercial bank, we have different industry specializations as we separate our commercial bank that focus on various industries. So that way, the advisors, just bring a little bit more insight and detail to their clients when it comes to providing advice.
And that's a good segue into the next question, Gareth, right? Because the next question really asks if it's harder today to get a loan for a business than, let's say, 2 years ago, right? And Gareth was just speaking about industry specifications and what's happening in the industry or the economy overall, right? Now, it's clear as day what is happening now with the pandemic and the fact that a lot of businesses have closed or are not open at this time. And that in and of itself brings challenges in terms of the business's ability to generate cash flow and to be in a position to service new and existing debt. As a result, those factors may make it a bit more difficult to access credit at this time, right? Given that we're in the middle of a pandemic, economic downturn, and at the same time, the business is not open for regular operations, right? So yes, it makes it a bit more challenging, right? But it does not say or does not mean that the bank is not giving out credit or approving deals at this time. It just means that we will be carefully looking at not just the assessment of the individual and the business, but we also take a look at the industry assessment to see what is happening in the industry and also what is happening in the economy, as these are also important players in determining if we approve a particular credit application. We see the next question here from Omar Sa. The question is asking, any resources on how to prepare future revenue projections for a startup? Good question, Sal. You can immediately leverage our RBC business banking website, where we do have a template and some guidelines on how you can actually do your projections and even do your overall business plan, right? So you can access our website there for some guidance. Also, some clients actually choose to use an accountant or one of those professional business services firm to actually do up their business plan. The idea here is that it's always great to leverage an expert as well too in this process to ensure that your business plan covers key bases. But if you're looking to get some information on how you can get that business plan started yourself, for sure, you can begin by starting with our RBC business website, and we're going to try to get that link in the chat to you so you can utilize that.
Great. Yeah, we're going to try to get that link over. There you go, as an option here, so you can access some of those resources. Okay, let's see the next question. Guys, can you tell us how you got into this business and how you think you've helped businesses? So, I think that's, one of those scenarios in the sense that, myself personally, I've been with RBC for over 17 years, started more on the personal side of banking. And it was about, I would say, over 10 years ago that I was very, very curious working with business owners on the personal side of things that made me want to get into business banking. And since then, I've had various roles in business banking, myself being a business account manager and a commercial account manager. And I think that, part of the reason for that is I really did enjoy, or always have enjoyed, working with business owners in terms of helping them with the resources from start to finish, from startup stages, looking at programs like the csvfp, just being able to guide them with those resources as their businesses have evolved, where we can come in as a financial institution to provide that support, whether it's credit support or, just streamlining operations for, their business operations, such as, deposit solutions. That's really where we come in. And then, of course, maybe even leveraging our networks to bring more resources to our business owners. One thing I would say is that, a lot of the times, business owners are just phenomenal people, entrepreneurs, great ideas, and, they take ideas and make it into something. And that's how I would say, we play a part in helping the business owners, but all of the credit does belong to the business owners themselves in terms of the risks they take and the path that they create for themselves.
Awesome. And just to quickly share, right, my entry into business banking, it was really just passion, right? My interest just led me into this area, and of course, with Royal Bank being a leading financial institution in Canada, it just naturally aligned with my interest, right? So for me, I take a lot of pride and a lot of pleasure in getting the job done for my clients. The idea here is that when I talk to a business owner, their business is everything to them, right? Their business with their family, their business employs a number of persons. So it's a chain reaction in terms of the number of persons who are reliant and dependent on that business. So for me, in how I would have helped business clients, I take a lot of effort in terms of offering good advice. It's not always about lending or deposits, but we have times, just as we're coming close to the anniversary of the shutdown we had mid-March last year, and I can tell you that I'm happy that I was a part of this whole pandemic experience, because the small business sector has been one that has been hit the hardest, and it provided me with an important opportunity to provide some guidance to business owners who would feel like the rug is being pulled out from under them. And I'll say to you that at RBC, we're here for you, and we will try our best to help businesses survive. And that's what we've been trying to do this past year. I see we have here just some feedback.
It doesn't look like there's any more questions coming in.
No more questions. No more questions there this time.
Really do appreciate it. This was great. Just the opportunity to answer the questions and have this opportunity to run this workshop. So, really thankful for having us. And I know that the next step is the networking component. So I believe if you click on the left side to the networking piece, that's kind of the next step. So if you want to join us to the left by clicking on the networking to meet our guests, that's where we'll be at for the next step. Thank you.
All right, guys. Thank you for joining.
Thank you.